It is the day before CPI and the markets are tense. We'll be discussing the latest in crypto, equities, and much more ahead of tomorrow's crucial inflation print today on Money Never Sleeps. Thanks for joining us today, folks. As we get going, do us a favor, hit that like button, subscribe to the channel. Remember, nothing Kevin or I say is financial advice, so please do your own research. Kev, happy Monday. Big day for the markets tomorrow. We have the latest CPI print coming off of a poor jobs report. Markets are still expecting the Fed to cut rates. Tomorrow, however, could add fuel to that fire or could dampen it because we have it's very mixed right now, the sentiment on what this number is going to look like. Will it come in hotter than expected? If that's the case, you're going to see a sell-off in the markets. I am very confident. You could see, and maybe we rally if it comes in. The expectation for the headline number is 2.8%. That would be up from 2.7% last month. For the core number, the expectation is even higher, 3.1%, which would be up from 2.9. So the markets are not, I think that's part of what is leading to some of this sell off in crypto for sure. Equities aren't too bad at the moment, but we are seeing a lot of red across the board. I think there's an expectation of this number is going to come in bad. And I'm not so sure about that. How honest is this number going to be? Like, I put it out there on Twitter yesterday. It's just like Trump has showed that he is totally fine cooking the books, man. Like, he is as big of a shyster as it gets. And he will, I can tell you one thing. If the number isn't to his liking, he is going to axe whoever put that number together so fast. So I think we're going to come in under this expectation a little bit. The market is disagreeing with me. The market is usually smarter than I am, so maybe just fade what I have to say here. But, what are you thinking? What are you feeling ahead of tomorrow's number?
House, thanks for being here. Looking at everything, understanding Trump, I think is a more important thing to be looking at as opposed to what the market's reaction is. The fact that we got the 90-day delay in the Chinese tariffs again. Thank you. It's not even Tuesday, but Taco Trump came in once again. We're looking across the board in all things. And I will say this, and we'll talk about this, this is a theory. A lot of people are saying it. I actually kind of believe in this, that the Taco Trump thing, China not getting the tariffs, you might see a bit of a Chinese rally there in Asia. I think we're looking at this point of mass market euphoria. I don't think we're done. I think that it's too early given where we are in the OPEX cycle. Now, there is a window of vulnerability, I do think, after the August OPEX. And the only reason I'm saying that is because when we look at 2020, there was a window after the February OPEX. Wasn't necessarily the quarterly OPEX, but it was going into it, right? And so we're looking at that September one being very crucial, very important. So the question is, if the market's like what the CPI data is, and we're not necessarily getting anything too concerning given what's happening in the market, there is definitely grounds that we can push harder and faster to the end of summer, just to pretty much all-time highs, and we could be at a point where the market is feeling so euphoric nothing bad could ever happen. I think that's the trajectory that we're on. It's going to be really interesting to see what the market reacts to, because maybe I'm wrong. Maybe the data is cooked. Maybe it's good data. And that being said, the market's just like, nah, fuck this shit. But I don't think that's going to be the case. I think, like you and I were talking about before the show, retail is very invested in this market right now, and they're buying nonstop the top of all these stocks, equities, cryptos, ETFs, and it's a very dangerous place. So could it push a little bit higher? Yes, irrationality seems to be the case for a lot of reasons why the market pushes higher, but we'll look at a chart in a few minutes and kind of point, like, we're getting to a point where it's just like, all right, one of these OPEXs is just going to be red dildos, like nonstop, just absolute obliteration.
Here's my concern when we mention, the retail investor being long right now, while, bigger funds are on the short side. I think that with how quickly the market moves, how quickly information spreads these days, and how tight finances are for a lot of people, I think a capitulation event could happen very, very quickly. Like, EPI comes in tomorrow and your average investor, sees the market open way down, they're panicking. They're selling. And
The panikins.
yeah, and I saw something that, like, most Gen Zers get their financial information from, like, social media versus traditional, like, money managers, which I think could have some merit. Like, I think people don't trust traditional money managers, and I understand why. I think a lot of those people who give us some of that information are very unexperienced and could lead people down a path of panic as well. So I just think that there's this potential, like, cascading effect of, like, people who are long, they're seeing their money start to go. They got bills at home that are getting a little bit tighter. Their paycheck's not going quite as far. And next thing you know, they're hitting that sell button. They're eating that loss. And we just see it go down and down, which, if you have capital on hand, it's going to be I think there is going to be that opportunity to buy when some of this panic finally sets in and we do see the market give some back, whether that's this week, a few months from now, who the hell knows. But I do think that that's something to be aware of, is like the mindset, because the market you are competing against other people, right? So, like, you have to consider how the other people in this market are going to think and react, and then use that to your advantage. And I think that that's, the retail money that is out there, I don't think it's a ton of it, is going to shit themselves if they see some bad data.
I honestly think you and me are aligned in this, and we're one united force in saying that that possibility is purely from a liquidity shortage, right? Everyone starts selling and there's not enough liquidity out there. And, when that happens, you start seeing things just go boom, 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 boom. Don't forget, Citadel and these other clearinghouses, they have to make sure that they can provide liquidity and to make a market. If the market cannot be made, you're going to see massive volatility and things. Honestly, it is the larger market cap stocks, like NVIDIA is most likely going to be one that's going to see extremely amount of volatility if there is some type of capitulation event that's broad, like the entire market. Bitcoin, same thing, like we've talked about with Michael Saylor, liquidity being the underlying issue in that as well. And also just like the short squeeze stocks too, right? If they don't have the liquidity to cover their positions, shit's going to keep going higher and higher and higher. So that is, the one thing that could lead to an absolute, market capitulation where you just one day is, Black Monday, say 20% down, and maybe it's not done then, right? If we look back to what happened in April, it was fast. It was pretty quick that we got down 10%. It was, it was shitty. I was having a fun time, but like for people who were buying the top, the Trump trade, like that sucked. I don't think that's the bottom, but it's going to be interesting to see, like, if it's actually worse than it was then. Where could we go? How fast is it going to be, obliterated? That's very similar to 2020 as well. All-time highs, COVID happens, you're down 37% in a matter of weeks. So just something to keep in mind. I'm glad that you did bring that up.
Yeah, I think it's we gotta look at this from a lot of different angles right now. We met, we're coming to the end of earnings season, so we're gonna keep the show a little bit shorter today.
Yeah.
Just because there's not a ton to talk about ahead of tomorrow's numbers, and I'm not one to. I know we don't really play with leverage on here. We're not
idiots.
We're not playing with options ahead of these super volatile. I mean, I don't really play with options. I just buy spot and then hold it and look for time to sell. But especially with these super volatile environment that we're in. So what do you want to look at, say, over the next 10 minutes before we kind of call it a day and focus everything on tomorrow? And we'll be back on Wednesday to discuss everything that happens there.
Yeah, I'm just going to run through a bunch of quick shit just because it's fun. I just want to talk about market euphoria, mass euphoria. I don't think we're at the end of it, but I do think that we're in it. And to be honest, we've been in it for 5 years. And that sounds so stupid to say given how much it's gone up since. But let's look at the S&P in the context of the past 25 years. This is it, guys. This was .com bubble, nonstop. So don't it's very easy to say like, oh no, the market always goes up. I'm like, yes, until you get one of those century, storm of the century type financial.
And we had two. There were two of them in the span of 8-9 years with
Yep.
the financial crisis as well. So you got that big move down in 2008, 2009.
Exactly. And I'm just looking, this is the 6 month, right? So, I mean, I could even go to the 1 month, but it just paints the same picture. Then you had, obviously, in 2022, you had a big move down, and then even in 2020. But again, that wick was pretty nasty, bounced extremely strong. Thank you, Jerome Powell and friends. But looking at this here, we have not had a correction in some time. Now, is the correction going to happen before the stochastic RSI gets overbought? I don't know. But if you look at the MACD, this thing's absolutely insane here. You can see how much bullish volume you've had, and that is euphoria. Euphoria does not make actual sense because you're just seeing everyone's making money. Let me pile more money into it. And as long as there is more money and the debt machine keeps rolling, you can continue to see these things play out over a period of time. I mean, this is 25 years. If we're playing, from the .com bubble on, if we're playing this from 2018, it's what, it'll be 16 years or so, or no, 18 years, right? 17 years since. Crazy shit. I can't believe it's 17 years. I feel old now, just even thinking about that. I was playing Modern Warfare at that time.
Buddy, I was in college getting my financial planning degree during that. Like I was in this shit. Those were interesting times. Like I was fortunate that like I didn't have a job yet and like wasn't too greatly impacted. But Julie, good morning. Thanks for joining us. Yeah, man. 08 being final year of college was a wild time.
Yeah, and then look at where we are today, right? So when we talk about market euphoria today, it's like, okay, this is kind of the window that we're looking at. It's not necessarily the greater picture that we've painted over the past 25 years. It's the, oh no, look at how much it keeps going up. This is just the ass end. This is literally, I shouldn't say the ass end. This is literally the tip of this whole euphoria. We're talking about this here, but no, we're talking about it for the past 5 years being that fifth wave, which is the equivalent of what this is here right now rolling over, right? So that's kind of one thing that we have to keep an eye on, and that's why things don't necessarily make a lot of sense. And that's why I think that we do have a little bit more room to the upside across the board. It doesn't matter what you're looking at, right? We have some red here in the markets today. Again, like you said, CPI, who cares? The market's always going to trade in anticipation, and it corrects itself because it's already been priced in, and then it just pushes up higher. Yeah, we're looking at some stochastic RSIs that look like they're coming to the downside. However, the Dow here looks like it could break from this trend to the upside. You can see that the volume on the MACD is also verting. NASDAQ, very similar situation with the MACD. Looks like there is a little bit more room to push a little higher. And the S&P, stochastic RSI looks like it can go up, and then might flip here on the volumes as well. So there's nothing saying that we're going to necessarily crash instantly. We just have to understand that at some point the rug probably will get pulled and you're going to have some type of correction. Now, how big that is, we don't necessarily know. But for the time being, going into CPI, understanding Trump, I think we're fine. Maybe that's the sell signal because I'm saying we're fine, but I think we're fine for the time being. Looking at the market pushing up a little bit higher, you can even see it in volatility, right? Volatility is a crazy chart. Let me see the other one. You can see how low it is right
Your
here.
Your fucking charts, man, are just all over them. Like I would love to see what is going through your head when you are putting these charts together. Like it's the Allen gif from Hangover of him like computing the odds and just like all these numbers.
Cards.
Yeah,
exactly. But looking at this chart here, you're consistently low down here. I honestly think that volatility has a very good opportunity to push up from here. I think it's extremely undervalued at this current level, 15.82. Maybe it pushes down a little bit lower. But, I mean, if you look at the return and where volatility has been historically down here in the past, every time it's at this level, you do have a rip to the upside. And even if it's not a big rip, you have a pretty good swing there. So seeing how there isn't necessarily a lot of demand for volatility, and you can see that stocks are at a pretty overpriced valuation, and also just looking at how everything is kind of very euphoric, it's not a bad thing to consider looking at volatility. And that's why I think that these OPEXs, going into the September OPEX and then also coming out of the September OPEX, because that quarterly OPEX we see that tends to be the market reverses. Lehman Brothers happened the week before the September OPEX, and you had the COVID crash going into the March OPEX. So these things on the quarterly OPEX is when things funds start to rebalance some of their portfolios in the market, out of the market. They're very important. So that's one that we're going to continue to watch. I think the VIX is undervalued here at this level. I haven't bought any. I'm still holding some from a little bit higher. I might add some over the next few days if CPI rips, and next thing you know, and I mean rips in a good way for the market, and you see that it might get sold off a little bit more. That might be a good time to accumulate. Again, not financial advice. Outside of that, let's
look at crypto and just wrap it up there.
All right, it's cool by me. Let's go to Bitcoin right now. It kind of hit that level that we were talking about. We said that it would probably go to like 120, 122 on Friday. It went to 122.4. It's a double top kind of right there. What you would like to have seen there now is, Bitcoin dominance kind of fall with ETH and Bitcoin pulling back a little bit, allowing alts to kind of take off. That's still very possible. I mean, Bitcoin got that nasty wick there. I still look at the Bitcoin volume down here on the MACD. Still room for a little bit of a push to the upside, I think. You are getting pretty close to the overbought on the daily. And again, Bitcoin is getting to a point where you kind of need more cash in the financial system to push it up, right? The price of Bitcoin only goes up because there is tons of money printing. It's
Michael Saylor buying.
Yeah, it's an inflationary asset. Right. I mean, it's an inflation. Inflation allows Bitcoin to obviously the price to go up. That's no, that shouldn't be like revelatory. Michael Saylor issuing convertible bond notes to find cash to prop up the Bitcoin price. Literally how you continue to push up. But again, that's another black swan that we continue to look at. I think Bitcoin right now at these levels, could you get a little bit more out of it? Sure. But I don't know if what's the saying about the juice ain't worth the squeeze or something like that? Or
that's literally the saying.
Yeah, well, it just sounds weird. The juice ain't worth the squeeze.
Is the juice worth the squeeze?
Yeah, that's the question you have to ask yourself when you're all the way up here, and you know that Michael Saylor is essentially going into a low liquidity market towards the end of the year. Can he continue to do, I don't know, balance all those plates and push the price higher? I don't necessarily know. I do know. I don't think he can. But what it's done to ETH is it's allowed ETH to rip too. We talked about it breaking this level of resistance. It did. It went literally to 4,300. That was what we talked about on the show on Friday. Went a little bit higher than that, 4,361. But that was the target. We said 4,300 would have been a very good point where it's going to break above. Now you want to see if it reverses. Could it reverse? I think it will. If it goes any higher, 45, 46, but I think that's honestly sucking in a lot of people at that point. I think that we are going to lose this as a level of support when we retest it, this 4,057 level. And if we lose that, then you're coming back down here, and you maybe, if time permits, you get rejected off this again, and then you're coming down. But you're very close to the end, in my opinion, for ETH in this 5-year saga of an ABC corrective pattern. Let's go to the 12-month. Maybe this is a bad one. No, this is what I wanted. A, B, and then C coming down. So that's kind of what we were expecting in the correction that ETH has from wherever it tops in this B wave. And once it does, then we're looking at extreme value for Ethereum way lower. But the problem is with all this stuff being kind of elevated in Bitcoin dominance, kind of finding support off that 60 level. Obviously, we saw it bounced. Is that it's kind of hurting our fart bag position, fart coin position. Our fart coin bags are literal shit as of right now.
I go to bed last night and it's at like $1.12, and here we are, Kevin. I am at my wit's end with some of these fart coin panic sells. This is the retail that is panic selling, is fart coin holders, because they just can't keep it together.
it's insane. Like how much sell, like it's just nonstop. Like again, it's
Where's
like
all
you didn't
the
have,
supply coming from?
yeah. Honestly, man. I mean, here's the thing. I hate saying this, but nothing is necessarily invalidated from this inverted head and shoulders. That being said, I am not confident in the amount of time that we have left in this market before we start getting into low liquidity. And see how they're panic selling now? Imagine when fucking institutions are going, bust left and right. These people are going to be selling this shit down to 2 cents.
Here's the thing, man. Here's what we got to do. We just talked about Saylor and his convertible bond notes. We got to issue convertible bond notes that have no real value and just put that shit into Farcoin to pump our bags. That really, it's crime time. All right. If Trump's doing it, if he's manipulating the markets, then it's time for us to get in on the action.
What was the line from Wall Street to Money Never Sleeps? It was like, not only is crime legal now, it's recommended. I'm like, that is
encouraged.
That's the perfect example of what this entire administration is. I don't think we have an SEC, to be honest with you. I don't think anything matters. You get Americans can trade on Bybit and all these other foreign exchanges. It doesn't matter. Trump doesn't care. Nobody cares, guys. That being said, that shows you that we are probably in some deep water. Shit's going to keep rising if we do get into a financial crisis because nobody cared. That being said, nothing's invalidated. I want to see it push higher so I can get out of this position. I think there's value in other places, but again, if it does, we do get this alt season and Bitcoin and ETH start pulling back enough where dominance gets, leaves some pressure off of the total 3 market cap. I'm just going to pull that up right now. Total market cap 2 today hit $4.1 trillion in crypto, which is hilarious in my opinion. But you can see how small of a market cap alts are. It's only 1.03 trillion. I would like to see it push up just a little bit higher and then give it to them because honestly, this Farcoin thing is the most aggravating chart I've ever seen. I've never seen a better chart just underperform. And maybe it's just we're early. But yeah, that's all I got to say. I'm frustrated with this. Nothing's invalidated, so I don't feel like selling, but I definitely want to sell. Just I'm not a proud fart holder at the time.
Frustrated farter at the time. All right, that's going to do it for today. We appreciate those of you who joined us. We'll be back on Wednesday. Discuss the latest in CPI. If there's like chaos tomorrow, maybe we'll like pop on for a quick second. Who knows? Hit the notification button, and we'll let you know if we need to do like an emergency show. We've done that before. Hit the thumbs up, drop some comments, all that good stuff. Appreciate everyone for watching. Mr. House, Julie, whoever else popped in, thank you so much. Be back Wednesday. Have a great day, everybody. Stay safe out there. Don't fuck with leverage, and we'll see you next time.
Take care.